Well, here we are. Welcome in, everybody. Hope you're having a great day. And Beth just left somewhere. I don't know where she's at. I was telling her, hey, after we finish this session, let's go eat lunch. Maybe I'll go by myself. Go grab something. I can't wait to get our refrigerator in. I'm so excited. LG, baby. That's the kind we settled on. LG. All right. So the markets. What's the markets doing? Matt's coming in. Dwayne. Jason. Jason, I've been missing you. Where you been? Ken's with us. JW. Rod. Everybody's doing good. All right. So what do we say here, y'all? Suckers. We got a 2% down move, baby. Huh? Fantastic. All right. So what do we say? First, we look at our AD. Our AD is negative 382. Y'all, that is weak. And look at this. It's got weaker. You know, look, they fooled them here, didn't they? And then it just came on back down, and now we're kind of at the almost the lows of the day. If you're looking at this chart, the little red lines here, where it shows you red, that'll show you that's the low AD of the day. So we're not there yet. Again, anytime it makes a low of the day, gives you a little thing. When it makes a high of the day, it'll give you a little green thing. But as you see, AD, advancers and decliners, we're going down. It is a weak day. So let's look at our first 15 minutes of the day. First 15 minutes was from 90 to 06. So what's that? 16. Why? The hourly mid-band is trumping down. We are below the cash open. We are below the overnight low. We are below VWAP. We are below everything. So kind of cool. The very first bar, this is where the amateurs came in. Looks like they were mostly bullish on the day. Formed a doji, which should have been a tip-off that, hey, if they couldn't come in on this bar and go up, see the doji, then they could not make the market go up. That would have been a key moment. I mean, if you're day trading or doing something like that, or just want to get an idea of what the market's doing, then that would have been a pretty good indication of what's going on. So let's look at, let's see, our other stuff that we got. Let's see what we got here. Yeah, here's our volume profile. Amazing how it works. What did we say yesterday? We said we are neutral to bearish. And I'll be dang. What happens? You know, shooting a fish in the water, right? Look at this, y'all. I mean, isn't that incredible? I mean, right here we said, I don't know how many times I can say it enough. And I don't think I act on it as strong as I should, but I should have said we were over bought. Even though we were at the point of control, we're overbought. Where are we likely to go if you're overbought? Well, you're going to go back into the fair value range. Who knew we would do it so quickly? But here we are. Now we are fairly priced again. And we've gone down below the value area low. So we should probably see a little interaction in this little 50% here. But it looks like it really wants to go down maybe to the 43.14. Or it may even come back and test this 43, what is it, 42.93 area. Wouldn't be surprised to see it come back into that at some point. So this is what we use to make our opinions. For some reason, I don't know if y'all's is messing up today, and I think I just need to reset my computer, but I think my little thingamajig is not working right today. Does anybody have what the screwdriver is today? My screwdriver doesn't seem to be. I think I just got to restart my computer probably. What's the screwdriver today, y'all? Anybody got it? Y'all were quiet today. Nobody's got a screwdriver? Nobody? Is y'all's just working?
I haven't looked at mine yet.
64.65.
What is it now? 54, 55?
I've got 64.65.
Oh, wow. Wow, it really dropped out, didn't it? Okay. I'll reset mine. I'll restart my computer after we fix. But if that's the case, y'all, look at this. So 28, 54. How come you're not updating those things? Uh-oh. doesn't look, it looks like it didn't tablefy that. How come it's not part of my table? Huh? What's happening here? Let's see, 928. Look, that should be blue. Well, my whole thing's just messed up today. The crap. The crap, y'all. Let's see. If I do this. I wonder if I can do this. Matt showed me how to do this. Remember, Matt, when you showed me how to do all this stuff right here, go 33, 54. But it didn't tablefy it, did it? Oh, I gotta get that fixed. Jason, maybe you can help me. What am I doing wrong? That ought to be kicking back up if that's indeed 54. Hold on. Date skew.
What was it yesterday? Because I neglected to record it.
33.
Okay.
So we got a big down move today. Let's see if I can. My table's not working. Let's see if I go insert table. Will that do some? Oh, let me do that. What the crap? Crap, baby. Aha, look at there. It's showing that those last two numbers are not in my table. Look at that. So how do I stretch my table down? All right, I got to figure out how to do that, but it's not including these last two numbers in my table because my graphical view is what really helps me to see what's going on. Why won't not let me drop on that either? Oh my gosh, I just got all kind of problems today. Calm down, Bobby. Now, what y'all saying? I'll pull mine up. It's bouncing between 65 and 70. Wow, that's crazy because that's where we were the last time, right? And that's where we said that's where we can make the money. And now I got my thing here that won't do my table. All right, I'll work on that. You know, I'm not going to bore y'all with that. But what that would tell us then is that if it's gone to 70, again, that we are, you know, now keep in mind it could go to 90, it could go to 100, and we got to use this and that to make our decision. So we're fairly priced, and we may expect a reversion back up into here, but you know, who knows? We'll just play it like we did. What I am happy about is that I didn't sell my 3 puts yesterday. That's a really good thing to start my Black Swan hedge, my new one. So today may be the day to do that. You know, you may be able to do that. So let's look at a couple of things. So we looked at that. The other thing I wanted to bring up is my second screen main. Second screen main. Let's see what's happening over here with our ticks and all. See all that yellow? All that yellow means, hey, we're going down, down, down. Then blue means we're going up, up, up. You know, a lot more yellow than anything. So am I really gaining anything from looking at this today? Yeah, probably not. It's just a weak market today. So we're down almost 2%. I think while ago we were down 2%. Okay, so with that said, we know what to do on days like today, don't we? We know what to do. So what do? Well, first of all, I want to go and look at our Greeks. Let's see what our Greeks are. You know, it's pretty cool when the market's down 2% and you're up, you know, a couple hundred. You know, I mean, this will say down 42. In other words, the markets are moving, right? The markets are clearly moving. So down a little bit, up a little bit. But notice, I mean, we're not down a lot when we are down. You know, we'll go back. I mean, we're doing really, really good. So that's the good part. So our deltas are negative. Now, as the market goes down, what happens to our deltas? You got to know this. As the market goes down, our deltas will become increasingly positive. It's the opposite of what you think. And as the market goes up, your deltas will become increasingly negative. So what I don't like, even though things are really hopping, so I don't like that it's showing negative theta. We certainly don't like, you know, negative theta. Now, yesterday we had this positive. So what does that mean that we've got negative theta? Well, markets move, things change as they move. But the great part is we've got a very manageable negative vega. So we would like our vega to be 0 or positive. Not always the case, especially as markets are moving. But even in a 2% down move, look at this. It's kind of sweet, isn't it? That you can come in and go, oh, I'm not scared of a 2% down move because of the way that we've got it set up. So, what do you want? What's your assumptions? Well, what is our assumption? Our assumptions are the market is fairly priced. What is that green line there? Let me see. What that is. I'm going to right click pivot points. So it's some pivot points that my pivot point study has drawn for me. And it does look like indeed this little pivot point that is auto generated by this chart is a point of contention, right? It looks like it's an area of support almost. And the market looks like to be going back to our 50% line now as AD is also pulling up. But who knows? Who knows? So let's go to our trade page and let's look at our ES. And remember yesterday, we were like, well, we could buy some more puts, right? We went to that 80 something days where we're doing the Frankenstein trade. And so here it is at the 80 where we bought some. And we bought some for 310. We bought some for 245. And, yesterday, like a Dorcas Malorcas, I could have bought another put, right? I could have for $2. Well, shoot that in the leg. 2% down move now has that going at 320 for me to buy. So that would be above my cost basis. But again, I could do it. Now, here's the cool part though, y'all, right? Remember, you and I said this is the Frankenstein trade. So what is the Frankenstein trade? It means that we're kind of buying on up days and we're selling on down days to create this wonderful Frankenstein trade where we're just kind of putting together. So the cool thing is we got the move that we wanted. So if my average price of my loans is, what did it say, 277, then I can certainly sell a put here at 330. Now, do I want to sell all three of them? Yeah, I don't think so. Market may still go down, right? According to our chart, the market still may go down, but I think I'm definitely going to sell one of my Frankenstein trade. So we're eventually going to turn this into a 3-5, 3 shorts, 5 longs. Right now, we've just got the 5 longs that we bought for an average of 277. So in hindsight, according to Pat Dye, former coach of the Auburn Tigers, God rest his soul, that I could have bought it for $2 yesterday, which would have been smart, because today it would cost me $320. But at the same time, I'm going to sell this one for $330. Now, how many am I going to sell? Well, let's see what 3 looks like. So what do? We right click and we analyze our trade. You need to be spending plenty of time on the analyze tab so that you can test your count. So we're looking at single symbol. We can look at our entire portfolio, beta weighted, and this, and let's go hide simulations. So it's just got positions. Let's see what we look like here. Make sure I got all my price slices. No, I don't. So I got to turn this from ESZ21 to just ES. So it's just everything. All my price slices. There we go. And let's see how we do it. Create my volume up to 15, which is where we think we would be in a 20% drop. And that would put us at, sure I got all my slices. Yep. My little slice, 35, 80 down here. So I'd be up $42,000, or between 18 and 42,000, just depending on where that volatility went up to. So I'm still good. So now let's go hide positions and just show our one little trade. Let's see. Crap, I'm taking all off here. Let's just do that one single one that we had here. So right click, analyze trade. There we go. If I take that off, that should go flat. There we go. So now I can go show all. So that shows me selling one put and seeing if we're still strong to the downside. Again, take it off of the specific expiration and just make it ES. Everything. And how am I selling one put? Well, I'm between, negative 7,000 down and up 7,700. If I sell, how many was I selling? 1 or 3? Hopefully it was 3. High positions. Yeah, it was selling the 3. So what if I just sold 2? How would that look? So let's go show all again. If we sold 2 of those puppies and we went down 20%, I'd be up, between $2,000 and $20,000. Okay. So what if I just sold 1 of those puppies? Okay. Let's go down and change it to 1. Because what we're doing is basically saying we want to keep our hedge in place. So let's make that 1. I'm going to see how many I can sell on today and still be kind of happy. So here we go. I could do it and be up 10,000 to 31,000. That's where I'm happy. Everybody see that? That's where I'm a happy camper. So let's sell this, confirm and send. Let's collect us some money. It's going to take us $890 an hour. Shebang, shebang. There we go. All right. So what does that now do to our Greeks? Now, instead of negative 40, whatever, we're negative 35, negative 29, moving quickly. That gave us a little positive theta, and that gave us some negative vega. So let's make our groups, show groups, and we will put that negative put into the Frankenstein trade that we're building piece by piece. One expired yesterday. There she is. So we'll move that to our Frankenstein. Beautiful. All right, now, what are we going to do today? Well, first of all, what a great day to sell a put. Right? We sell a lot of them a lot of the time, but best time to sell a put is when the market's down. So let's go get our MES trade out of the way. Let's go sell it. MES. Where are we going? We're going closest to 60 days without going over. So we go to 52 days. Now the market's down 2%, and we've got some short puts down here. Oh my gosh, they must be in trouble. Well, not really. The closest one is at a 15 delta now, or 13 delta, 15, 16% probability of being in the money. See how safe these trades are? Look at that. Now you'll have paper losses on them, but the trades are really, really, really safe. So what are we going to do? We're going to sell a 10% probability of being in the money. Look how much farther out we can sell. And now look at our premium. You can sell a 10% probability of being in the money way down below where we sold these other ones and collect $22. I like it. And that helps neutralize our delta, and it gives us some positive theta. Just sell one of those. Ta-da. All right, let's go back over here and put him in its right little classification. So we got our little MES here, right click, move to group, and we're going to move that into the micro short puts. Beautiful. All right, so we got everything classified. All right, what else do we do on down days? Well, first of all, we're looking at our deltas, and our deltas were, wow, look at our space trip trade, gentlemen. Up 575, up 550, sweet baby. So now let's go and let's do another trade that we do. What is that? That's the 111 trade. So let me go over here to the other account and put us up one of those. I wrote one ES put, selling another later today, maybe one more during the day session, and if not, then after hours. Very good, Ken. So that's what we're doing, right? We're just in our Frankenstein trade. We're just kind of going, let's use the ebb and flow of the market to make our decisions. Just go over in this account and let's do a 111 trade and get that. So this account's got, we're delta neutral, negative vega, positive theta, which is good. Now this one's, a little bit positive delta, so we're down a little bit today. But let's build us a 111 trade, because that's another thing we do on down days. So what do? You go out point nearest to 45 days. So we could go out to the 52 day. Let's go there. So what are we going to do? We're going to go and do us a long put vertical. And we're going to make that 50 wide. Okay, and we want to collect, or we want to have a debit for about $10 for that trade. So let's move our strikes down. So it goes down to about $10 here. Stop right there. That's $12. Keep on going. 11.75, 11.50, 11.25, 10.75. Move. Is it moving or not? Yeah, it is. 10.50, 10.25. 10. There's $10. Is that 50 wide? 10, 20, 30, 40, 50. Yep. So let's pay $10 for that so we can get filled. Working, working, working. Let's move it up to 10 and a quarter. Quarter. Yeah, that will fill us. All right, we'll fill there. I probably should have done that. What I like doing that like 3 times. Hold on a second. Activity. Let's do it 3 times. Similar order. Let's do 2 more contracts. Here we go. Now what do you do? So great day to sell a put. So let's go and let's sell one that we can sell for $20. But the 3,700 way on down there. And we want to do 3 of those. And there's our 111 trade. So what did that do to our deltas? That gave us a little bit of positive delta. I think it should have given us some positive theta. So let's go into the other account and do those same strikes. You can't do it as a single order in Tastyworks, but you can over here. So we're going to do a 111 trade at, what do we say, 52 days? And we're doing the 41.90, 41.40. Again, analyze your trades, right? Make sure you know before you put a trade on, what's it doing for you? What's it doing for your Greek? So we said 41.90 buy. And we're going to sell the 41.40. Cha-ching, cha-ching. And then we're going to go down and sell the one that'll bring us in $20. 3,700. Huh? Wait a minute. We got a bad print there. Ooh. Okay. So then let's go 3, 3, 3. And we'd like to do the whole thing for $10 credit. Shebang. All right. So we got filled. I should have done the analyze tab on that. I'm sorry I didn't do that, but we'll put it in its place and then we'll show you what it did. So that is a 111, 7th, 8th, 9th, 10th, 11th, 12th. So that's a 111, 13th. We'll see how that baby's doing for us. Unallocated. We'll right click, move to group, add a group, and we'll call this 111, 13th. Ta-da! And Matt has got me very, very, very mindful of keeping this thing all in line. So let me move it down. So I got them all alphabetized. Pass that one, pass one more, pass another one. I wish you could just drag it. It'd be so much better. Let's get them all in order. Then we'll look at our Greeks on it. And we'll go after the 12. We should be done. There. So what did that give us? It gave us positive delta. Why is that okay? Well, because we have negative delta. It gives me positive theta and a little bit of negative vega. All right, so let's see what we've got so far. Let's take our groups off so we can look at our things. So now we've got still negative delta. We've got negative theta still. And most of that, you say, where's that coming from? That's coming from our right here, from our black swan hedges. That's where that's coming. Even though he may say that some of that's fake, yeah, I don't know. Yeah, I don't know. We'll see. But theta's popping all over the place, negative to positive. It's hard to know what you got because the markets are moving. Markets move, and certainly we've got some moving markets today. So this is a great day, even though I'm down $610 on my black or on my broken wing butterflies. I mean, what a better day to put on one to the downside, right on the put side. So let's go over on this account. Best day to put on one is when the market's down. So let's go to SPX. SPX trade. Let's see where we've got these at. So we don't have one out 6 days. I want to put it further out, or I want to put it there. 6 or 13, Bob. Let's go 13. I'm trying to think about my overall market direction and what I'm thinking about. How far out I want to go. Let's go 13. So we're going to go and do a long put butterfly. We're going to snap that back leg to break it. Yeah, I like moving it down before we can pick up about $1. It's a high probability trade. You see how these markets are really moving. It's a $1.10. See how quickly these things are moving? Let's see what we get. Probably won't get a $1.10, but we'll try it. No takers. No takers. Place order. We'll go to $5. Here we go. So we're in there. So cool thing is now I'll just move this over to the side. They're so much easier to make in Tastyworks. And I'll go put me one on over here. Now, and then we'll look at the, before I hit the confirm button, we'll see what it gives me. SPX going out 13 days. And we're going to buy the 42.90. Buy. Hold your control key down. We're going to sell the 42.85. We're going to snap the back leg. And we're going to go down to the 42.75 and buy that. So it's a broken wing. And we need to make this 2 in the middle, right? So we got wing, wing, body. All right, so it's going for $1.05 credit. So let's analyze the trade, see what she gets us. So we'll go to I just want to look at the Greeks on it. So let's hide positions. Hide positions. So that should be the only trade on the board. Beautiful. All right, so what does that give us? That gives us positive delta. So this says 0.81, but actually it gives us 8.10 because this is SPX delta, right? And it gives us positive theta and just a little bit of negative theta. $500 of buying power. Beautiful. Let's route it, confirm it's in. Let's see. Probably won't get $1.05. We'll try it. Hey, we did. Even better than the other. So that's a broken wing butterfly on the put side. So let's go back to monitor tab and let's change it to groups. I said let's change that. So then we've got BWB puts 2, puts 3. So this will be BWB puts 4. BWB puts 4. So control key, then click on those 3. BWB puts 4. Right click, move to group, add group. BWB puts 4. Now, here's what I hate doing, right? I hate this. I hate that it's up the top, and it would be so neat to just drag that down and so easily put it down there, but you got to go through this whole thing again. You gotta move down, you got to hit again. If y'all find out a better way to do that, please let me know, because I hate just spending our time doing this, but if I don't do it, I won't do it. I won't keep our things down. Over down to this little place. I'll try to do it. Trying to keep everything tidy. And this is really good if some of y'all are, what are those people that are obsessed over stuff? I'm not one of those. I can have things junky. My wife doesn't understand. She's like, you kill me the way you don't even need sheets on the bed. I said, I don't even need sheets. Who cares about sheets? She's like, oh, I have to have them this way. She's got to have them this way. And two, she's one of those, Beth, she's got to have her socks on just so, oh, if the little bit of thing at the end is crooked, it just drives her nuts. And it drives her nuts with my kids. And when I put my kids' socks on, I don't care how I put on the toe of the sock. And she just flips out. And now she's got my kids flipping out. And I'm like, well, look, you little turd. If you don't like the way Daddy does it, do it yourself, you little mongrel. Jeez. Kids. That's the one that wanted 5 kids. She said it was me. And I'm like, oh, that was you. I don't even like kids. I mean, I love my kids. Don't get me wrong, but just in general. See how hard this is? Somebody from Tasty Works will give me an easier way to. But I am glad, I'm fortunate that we can group our things together. So we're almost there. And one more should get it down. Okay, so BWB puts 2 expired fully profitable yesterday. So let's take those off. Yeah. And so BWB puts 4. Yes, I want to delete it. So BWB puts 4. Yes. Let's go back to what is that? Let's go back to what it gives us. BWB puts 4, positive delta, positive theta, and a little negative vega. All right. So that's what you do on a daily basis. So we use the movement in the markets to make our decisions. Look at this, y'all. Boy, was I smart on this by harvesting that. Look at that. I took risk off, and look there. Now we're up $198 on this one. I got 2 days left on it. Should I close it? Should I put it? See, before you make those decisions, look, what does it give me? It gives me negative delta, which I kind of like. It gives me between negative and positive delta. I think it's still positive theta. Right there it is. Positive theta and a little bit of positive vega. So, look at the forest first before you start making your decisions. So look at this first. This is what we did the first 6 months of the year. We looked at this. We go, what's our deltas? Well, we want to keep them a little bit negative, to neutral. We want our theta to be positive, and we want our vega to be manageable. So, this number is, very fluid right now. So all we can do is, Rome wasn't built in a day, and I don't have to get this, a huge amount today by putting on, tons of trades, but I did put on a few that were positive theta trades. It's all I can do. It's all I can do. And we've got our nice little hedge, as we looked at, that is doing mighty well to the downside. And we saw that we could certainly use this down move to sell 1 put today. Now, what I would hope is that we either go big down from here or go big up from here. Because why? Then I'm going to add, if we go big up, I'm going to add another long put to my Frankenstein trade. And if we go down big further, heck, I'll sell another put in a heartbeat. Especially if y'all are telling me now that the skew driver's 70, we know what happens at that point, that there's a good chance that if we're back up to here, what happens? It's going to normalize once again, once I figure what's going on with mine. All right, now here's what I wanted to share with you, a couple of things. Let's see if I can find it. So let's see. here's how I found this. How to beat the high cost of living. No, how to beat the S&P 500. I think this is where I found a couple articles that I want to share with y'all. Okay, can anybody beat the market? Blah, blah, blah. You know, you got everybody, you know, that's what people want to do is they want to beat the market. And there was a couple things that I wanted to show you. This from 7/11/21. This is kind of interesting. Now, I don't know if we're going to act on this or not, but it's interesting, right? And I like looking at research and new information out there. So let's just look at this. Here's the article that I wanted to share with you guys. Anyone can beat the stock market, new research suggests. So what this talks about is that, 60 years of theory says, no, you cannot beat the market on a consistent basis, but maybe you can. So here's what this article is talking about is you look at the new entries to the S&P 500, and you look at the ones that are leaving, and basically over the next year, these that leave will outperform the S&P by a great deal. Okay, so that's the premise. Let me post this into our room so you guys can make this. It's not our room. It's not a room body. Let's go to the chat. I got to answer Rick's question there. Everyone, here is the article. So basically, if something's going out of the S&P 500, buy it. If something is going into the S&P 500, sell it. So let's see if we can see what stuff is going in S&P 500. I saw the website that actually is the S&P 500 website. Let's see, what is it called? It's called SP Global. Here it is. Here's where we keep up with that. So this is something that some of you might want to consider, right? I don't know if I should accept. I hate hitting accept all cookies. All right, so let's look at this. News and announcement. So we need to look at this page. Probably need to bookmark this page, right? If we're going to do this type of thing. But so September 3rd, September 23rd, let's see, flow adjustment methodology clarification. All right, here we go. So let's look at this. All right, so this is kind of cool, right? So it tells us specifically on September the 20th, so we're 8 days late, but it has added these different things. I like the one bro. What's wrong, Ken? I heard you. What's wrong? You say something? So we've seen that these are added to the S&P 500, and then a few of these are being deleted. So what the research would suggest, or that they went and found over the last however many years is that over the next year, it would be beneficial to buy the deletions, okay? And it would be beneficial to short the additions. That's kind of cool, right? I mean, that you could see. So I was looking at some of them last night. So let's look at some of the deletions. Unknown group. I have no idea what that is. It's in the financials, okay? So financial sector. UNM. Let's just look at it. UNM. So we go here. We go to UNM. And let's look at this little puppy. So keep in mind that this thing was added into, or kicked, sorry, booted on September the 20th. So where's September the 20th? It's right here. Right here. Look at this. It was booted September the 20th, right here. So what it says is on the day that this thing is booted, we should have bought it. Well, heck yeah, we should have. Look at this. If we had bought on that day, well, we're already up, considerably on this, right? So, is this something that we want to do today? I don't know. So is there a likelihood we know what volume profile does for us. So we see a big gap here and we see the point of control here. So there very well may be some movement back to fill this gap and back to the point of control. If you see that, what could you do? Well, you could buy shares of UNM. So it's going for 20, 5025. So let's go and look at it. So how could we play this? Let's look at it. UNM. Let's go to trade tab, UNM. All right. So you could buy her shares, right? Buy her shares. You see what that is going to cost you $2,500. Takes $750 buying power. Now, what else could you do? Well, there's other things you could do. You could go out, over a year to these, and you could buy leaps, right? You could buy a call. So if you bought probability of being in the money delta, look at that, 100%, and this is 68%. That's insane. Well, let's say you go out and you did buy one of these, right? So, and that's not too bad of a market, right? 20 cents wide on those $479 leaps. You could buy this. It's going to cost you $1,510, and it takes $1,500 in buying power. Right? So you could pair that to buying stocks. If you actually bought 100, it only takes $700 in buying power. So you could buy leaps, deep in the money calls on this to, basically simulate the purchase of stock. So, whatever you want to do. So your maximum risk here would be, the $1,510 that you put in. Again, if you do this, what's your maximum loss? Only takes 750 in buying power, but your, what does it say? That's what your, maximum loss would be, is your 2,500. So it depends on what your risk preference is on that. And then another thing is you could say, okay, I'll buy. What if you wanted to short the ones that were going into the market? So you could say, okay, Match Group is going into the market. So we think it's going to underperform. And if you were going to do it, I don't think I would, just pick over them. I think I'd do all of them. Well, I would at least buy the ones that were deleted. So that gives you 3, right? If you wanted to try this strategy, kind of cool, right? You would be long UNM, NOV, and PRGO. So you could go long those. If you wanted to, do that, you could also go short Meridian, Brown and Brown, and Match Group. Well, how would you do that? Would you sell shares and be short? No, I would never sell shares. So if I wanted to go short on some of these, MTCH, let's look at it. I think it's had a good run up. MTCH. So what they're saying is when the announcement is made on Match, so the announcement was made on Match going in on September the 3rd. Crap, we don't have that showing here, do we? See if we can go some more days. Let's see. Time frame. Let's go 10 days, 30 minutes. Let's go to 30 days, 10 minutes. So here we go. On September the 3rd, which is right here, they made the announcement that Match was going into the S&P 500. So a prudent man on the announcement perhaps may have bought Match. Why? Because all of these index funds that track the S&P 500, what do they got to do? They've got to buy Match. So you know that there's going to be a lot of volatility. There's going to be a lot of purchasing of Match. So we've seen that happen. So how do you do it? So let's say you missed it here. You were not able to buy it on the day the announcement come out. And then here we are the very next Monday. Okay, so they announce it on a Friday. Monday, stock opens big. So what you do then is you go, well, crap, I missed it. All right. So what you would do then is say, I'm going to wait until I get a pullback to the 20 or to the 50 moving averages before I go in again. So, right here was another opportunity for you to go long. It goes beyond the 50 and boom, goes back up, because keep in mind, those indexes, those ETFs that track the S&P 500, they all have to purchase this stock. They're going to purchase it. So some of them did it here, right? They did it there. So what could you and I have done? Well, we could have waited to touch back of the 50, then bought that book. And then, you're getting 155 a share, 150 share, boom, you get 171, you can get out of the thing. So now what the research shows is after it is in the S&P 500. So here's the day it's in the S&P 500, right on September 20, that this is basically going to underperform the S&P 500. Okay. Well, it did a little bit, then it starts going up, and then it starts going down again. So, and you can play it. I mean, if you're thinking that this is still going to be, pretty bearish combined with the other ones, what could you do? Well, you could go out and buy a deep in the money put. MTCH, right? You could go out on MTCH and go 479 days out, or you could do the 290, but you're looking to play it over the next year. And you could go over here and buy a 70% probability money being in the money, 70, 75. That's going to cost you $5,320, right, to do that trade. If you're going to do that in short. But I would probably say I'm much more likely to go long on those positions that are going out of the S&P 500. So I wanted you to at least read this article. Where did it go? Anyone can beat the S&P 500. I think it's interesting, right? Let's look at Tesla. It talks about Tesla being added, back in December. Well, let's see what Tesla's done. So the assumption would be that Tesla would underperform the market after being added to the S&P 500. So let's see what that did. Let's see. Let's go to 1 year, 1 day. So where it was added in here, right? So December 18th, when it's adding, it's going up, 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 and then boom, 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 down, boom, 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 boom. So who knows? I mean, it's heading back up now, right? But this was over a long period of time, how they're talking about these things were, I can't believe I drew big green monsters on Tesla. How cool is that? Very cool. So it's something that you might want to look at. Also, I found another article, how to beat the S&P 500. I just like reading when I can't sleep at night. What else did I see that I thought was interesting for y'all? How to beat it without losing sleep. Oh. Yeah, this is what I was thinking about for our next little party into the, I can't find it. I don't know what I found, but I'm thinking about what else to put into our AIM. What can we do with our AIM? And I'm thinking about different things. One thing that I thought about, let me just share everything I'm thinking about, because I'm constantly learning. Hope y'all are too. So, one of the things that I thought about is doing SPY sectors, right? S&P 500. So this is all 11 of the SPY sectors together. And I've thought about maybe, kind of weighting the S&P 500 and doing the sectors, right? The energy and the technology and the consumer goods and all the stuff that makes up the 11 components. Let me show you those 11 components. All right, so you got XLV, XLF, XLB, XLI. So all 11 of these are the components of the S&P 500. So that was one thing that I was looking at. Oh, also, let's talk something else. We like doing the AIM with the leverage ETFs. The only problem with the leverage ETFs is that, let's say the market does go down 20%. Then UPRO, let's go back to volume profile, look at UPRO. What happens if we're in UPRO in 3 years weekly, right? So let's say that you're in UPRO here, where we were in UPRO, and you're at 130, and the market goes down. Let's say we have a 20% correction. Say we have a big correction. Then UPRO doesn't go down 20%. UPRO goes down 3 times as much as the market. So it goes down 60%. So if it's at 100, what is it today? 125 or so, 130, then you're gonna, go way, 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 way down. And you see what happened in March of 2020. UPRO went all the way down to, what is that, 20 to 17. Look at that, 17.54. Really, really low. So you could really take a beating here. Now, do you know how we could overcome that though? I've got an idea. So let's say you really like UPRO, but you don't like that unlimited downside to UPRO. Okay, what could you do? Well, let's say you really want to go out, a long period of time, and you basically say, man, I want to stay in UPRO come hell or high water. Let's say you do some leaps on that, and you go out 479 days. So you sell 2 at the money calls. Right? Let's say you sell 1 at the money call, and then you buy 2 calls further down. Now this is kind of the way that Liz and Jenny would do the zebra trade, huh? So you buy 2. So buy 2, sell 1, right? So that the extrinsic value gets basically to 0. So you're looking at extrinsic value, you're moving stuff all around, 116, 245. God, it's hard to find something where that makes that a 0. But you could do something. Let me just show you the curve and the analysis of how that looks. So if you did something like that, then you have still unlimited profits, right? So this thing could run to the moon, and you could make as much money as UPRO continues to go up. But at the same time, let me minimize this, you have a bit of defined loss. So your loss on this is defined so that you're not having an unlimited loss. Now it could still be a big loss, right? What does that say? That's a $7,110 loss, but it's not the same amount of a loss that you would take that the curve goes down like this, right? The analyzed tab goes straight down like this. At some point, this risk graph, by doing a zebra type trade, your losses are fixed. Or what else could you do? If you like the the upward potential of something like this, and you could just buy a call, right? You could buy some call out here, a year out, 2 years out, if you wanted to be long the market, like a UPRO. But what I would suggest is this: if you're wanting to do some of these, leverage ETFs, because I kind of like them. I kind of like doing the TQQQ and the UPRO. The thing is that, you kind of get a little bit nervous if those things we have a major correction and those go down way, way down. You can lose a lot of money. So if you do something to where you wait for the correction to come, you wait for that correction to come, and then you go out and, buy your call on a big, 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 big down day or big correction. Can you imagine what would have happened if you and I had done that on the TQs. Let's see, what is this? Wait, look, what if we had done this on the TQQQ? When the whole world was fearful in March of 2000, right? And everybody, or 2020, where's 2020? Yeah, this is year 2020, right? Hard for me to tell. Yeah, here's March 2020. Can you imagine what would have happened after this humongous, drop that we have if we had come in and bought this at 17? Can you imagine? Been a heck of a ride, wouldn't it? So what we could do now, look, we're getting a nice little correction coming right here. This is a weekly chart here, so we're getting it again, but we would love to have something that moves into here before we get into something like that long again. Maybe that comes down past that 200 moving average. That was what, 200 week moving average, which is right here. If you could go down, wait till it pins that right in here, then go long on TQ. That's good. Because where's technology going to go over time? Well, there's a good probability that that's going to go up. It'd be a great time to get it if you could get it down here into the double digits. Even if we would pick it up at 52, where it's 126 now. It's cool stuff. All right. Well, we covered a lot of stuff today, y'all, I think. And but I did want to show y'all a couple of things about the SP 500, those coming in and out, just some of the things that I was reading about that. I thought it was very, very interesting. Now, keep in mind, I'm the one that says I don't need to be trading individual stocks. And then I'll read something and then I'll go in and on my little test account that we do here, I do experiment on things. My problem with leaps, and y'all see me, is I can't hold them long enough. I don't have the patience. I mean, my time frame is days to, a couple weeks, and I'm liking to get out of stuff. So if I were to do those, I'd have to commit myself to being a little bit more long-term. That's hard for me. Good. All right, good session, y'all. We covered a lot of stuff. So